Now we need that on. There we go. Whoa, 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 whoa. What's going on here? Hello, hello, hello. Is we getting audio? Are we getting audio? Okay, there we go. We getting some audio. I don't need the tool. All right. That's better. I just wanted that. Okay. All right. Let me get that over there. Let me get this. Let me get everything sorted out again. Let me get the desktop layout back to normal. Okay, cool. Got the chat pulled up now. Yo, what up, Travis? Welcome to stream. Good to see you specifically. I'm sure that other people will join in here shortly, but I mean, it is what it is. We'll just keep on going with it. Today, actually, let me check the audio first. Or if you want to if you could let me know how the audio is, that would be perfect. Yes. Let me just check the audio real quickly to make sure. Wow, it's kind of a little bit laggy. And there's no audio coming in. Okay, there we go. There we go. I think that looks good. Okay, it's not laggy anymore. I'm like doing a dance on the stream and it's like no. Watching myself. How is everything? Everything is looking a-okay. Looking to get a new microphone. Got a subscriber that said I should get a new microphone because he can hear pretty much everything, even like the mouse click. So. Cool. Awesome. All right, cool. That's perfect. That's what I like to see. So we're going to be talking about two different. We're going to be talking about one season video tonight that we got to get into, and then also we'll be getting into a article as well. This article is a little bit different than like, it's not like financial news. It's like the state of the American population, and I like it. I think it's good. I think it's I hope that it's encouraging to some people, and not so, and encouraging the people that are investing, and the people that aren't investing. I hope that it encourages you to start investing, pretty much. So that's all I can I guess say right there. Right on my trusty Starbucks cup. It is good. Yes, thank you, Travis. I appreciate that. Some like music gets like a lot louder, so like it's so hard to keep it like adjusted. The music stream that I listen to is like weird, super weird. But let's just go ahead. I guess we're already here. Let's just go ahead and jump into it. And then when more people come, we'll just throw it up for Q&A. I'm sure that Travis, you have a few questions also, so we will definitely go ahead and possibly look at those as well. But this is good stuff. It feels like it's like laggy. Like, I don't know why that is. It shouldn't be laggy like that. Like, it says my CPU is good. It could just be the NDI coming through that's lagging it up. Maybe if I just pause this and it doesn't get so laggy. I don't know. What the heck am I even doing on the... Are you kidding me? Whatever. It doesn't matter. I guess it doesn't matter. I'm just looking at this. It's what it is the camera feed that's being sent over to the streaming computer is what's lagging up. It has nothing to do with the actual stream that's being put up online. It's just kind of weird how that kind of stuff works. I think that Cox is slowing down my bandwidth. Oh well. Let's just go ahead and jump into it then. Oh, we got an ad that's playing 5 seconds, okay, and then once this ad is over, then we'll go ahead and actually start the video, because for some reason they play ads on Oh, okay. We don't even want to watch this video. We don't need to watch this video. All right. Here we go. Let me just hit that record button.
Atoms fall apart. Solar flares arrive.
And let me just make sure that this is going to work. Okay, cool. That works also. Here we go. Hey, what's up, everybody? Welcome to the live stream, or if you're new watching this at a later date, it'll be known as Keith Condensed, which is basically a little part of the actual overall live stream that I just pull out, do a little quick edit on, and then go ahead and throw it back up online, so that way you're not confused. But typically these videos are posted a few days after the actual article is published, so if you're watching this video later and you're like, wow, this happened today, probably not. It probably happened about 3 to 5 days ago. But today what I wanted to talk about was an article that I found on Yahoo Finance, written today by Melody Ham. The title of the article is Nearly Half of America isn't getting rich off the historic bull run. Now, if you're like sitting there and you don't know much about investing and you're like, what the heck is a bull run? A bull run is where the market continues to grow and the charts, you know, continue to just keep on going up and up and up. That would be considered a bull run. And so half of America is not getting rich off this historic bull run. And if you're sitting there like bashing your head against the wall and you're like, how come Americans are not in on this bull run? Like, what the heck is going on? You know, like you're sitting there and you're thinking that. Well, let's just go ahead and take a deeper look into the actual article. So on the actual article, they did a study on 5,000 different people. I guess it was like a questionnaire or a survey or something like that. I'm trying to figure out the company's, so it was by Go Banking Rates, found that 43.8% of respondents answered no when they were asked if they are currently investing their money. If you're like, what? So there's only about 66% of us that are investing our money. And then here they have a quote that says, investing is the way that you secure true wealth. There's this pervasive idea nowadays that it just takes a paycheck to achieve wealth, which is completely false. That's certainly true for some individuals. Yeah, I mean, if you could open up a swing trade or a day trade and go ahead and take 100% or something like that, for sure, and do that a few times. But I mean, long term, it's not really going to be the most successful thing. But then they, go ahead and say that investing is how you get there, and many Americans aren't doing that, or basically missing out on that. Basically, like, and then also, I guess in the actual survey, they asked Americans like how much they were investing, or how much they had, I guess, in their investments, and they said that there was an inverted bell curve. So there was people on this side that had, let's see. The survey also asked how much money individuals were investing right. The findings represent an inverted bell curve, with 29% investing more than. Okay, yeah. So there was an inverted bell curve with basically 29% of people investing $50,000 or more, and then they had this dip, right? There was nobody in the middle investing around $25,000 or $10,000 or even $5,000. And then they said that there was another 27% over on this side that was about $99, about $1,000 or less exposed into the market. So there was this like 50% on both sides, and in the middle it was kind of like just like, well, like we don't know, inverted bell curve, right? So that's where most of the people are missing out. And actually, like, to be honest, it's probably the rich people that are investing, the poor people that are investing, but there's this middle class area of people that are not investing at all. Just running back to the stream real quick. What up, Slash? Good to see you, man. Slash 2,314. Good to see you. What up, Carlos? How's it going, dude? What's up, Coach? Nothing, man. Just in the middle of talking about an article about how like 44% of people are missing out on this historic bull run. However, like, I guess something to consider, and towards the end they talk about it, is that the question that was asked, are you currently investing your money? The researchers did not like specify and tell investors tell people answering these questions, respondents, that, you know, like 401ks do count as investments, and your pension or whatever, like that kind of stuff, like owning a house might be an investment, like that kind of stuff. They didn't give any additional context. All they did was ask a simple question: are you currently investing your money? And 44% of Americans said no. So this could be obviously a little bit skewed if they gave people the additional context of, like, here's what an investment is, here's what the definition of it. But they also asked in here, like, what's the reason why you are investing? Like, so this out of the 66% of people that said yes, they asked them, you know, why are you investing? And overwhelmingly said for retirement. Just who do you invest? So yeah, out of the 2,809 people that said yes, they do invest, a majority of them, actually 46% of them, said that they're doing in individual stocks and bonds, and then also broader mutual funds and ETFs came to a close 44%, and then those are doing, let's see. Yeah, I said save for prime. Okay, 57% save for retirement. Okay, yeah. So 44% investing in ETFs, 46% into stocks and bonds specifically. I mean, that's almost like that's completely like 90% of people are doing either stocks and bonds or ETFs and mutual funds. Which, I mean, if you think about it, there's other ways to invest. There's gold, silver. I mean, if you're buying gold and silver, you're probably missing out on the bull run. Real estate, specifically owning property, would be another way. Bitcoin, cryptocurrency would be another way. I mean, if that's your thing. Forex would be maybe another way to get around it. But I think when it comes down to it, most people think that, hey, there's individual stocks and bonds, or I can go with ETFs and mutual funds, which I would say that's pretty much the most popular opinion out there as far as investing goes. What does this mean? I guess, like, for me, I think it's awesome. Like, I think that for me personally, like, I'm at a point where it's great because I continue to invest. I would say that actually I kind of am in that middle bell curve right now. All the accounts that I have specifically total around $10,000. So I'm probably smack dab in the middle of that inverted bell curve. And I don't know if that's because typically when you're in that inverted bell curve, it's really, really hard to keep on investing, or if people get to a certain point and then they go ahead and cash out to go ahead and buy maybe a house for themselves or a down payment, or use it for something that they've been saving up for instead of actually the main purpose, which was originally for retirement or whatever. So I guess for me, it's like, you know, stay mentally focused on the task at hand. Keep that goal in front of you, or where you want to be in the next 5, 10, 20 years, and then keep making those regular deposits to make that happen, to set yourself up for your future in the next 30 years. Anyways, we'll go ahead and leave right there. What are your thoughts? Are you currently investing in the market? If so, where do you fit on this inverted bell curve line? Are you more towards the $50,000 range, or are you more towards just the $1,000 range? I would say any amount of investing definitely helps, and I would say that on the smaller accounts, making those regular deposits, getting yourself a great dollar cost average, I think is a great way to go about it. But anyways, I would love to know your thoughts and opinions, comments, and criticisms down in the comment section below. But anyways, until next time, it's your boy, Coach Keith. Thank you for watching. I really appreciate it. Peace out. Yo, what up, Trevor Graham? How's it going? What up, Gestures just stopped by too. How's it going, guys? Good to see everybody. Thanks for swinging by. I wonder where everybody fits in the actual like place, because like I said, I kind of find myself like, if there's 50 people with investing $50,000 or have accounts with $50,000 or more, and then there's people that have $1,000 or less, basically, and that's basically 50%, and then everybody else is kind of in the middle. Like, I find myself, I think I'm actually probably at the very, very pinnacle of the bottom of the investing place, I guess. Investing bell curve. Interesting kind of. Yeah, yo, don't forget, if you're on the stream, smash the thumbs up button, hit that like button. Really helps me out, really helps the stream out, and really helps boost it into the future. So if you guys like what you see, just let me know by smashing the like button. I would appreciate that. Drop that like. And if you'd like to go one step further, feel free to hit the share button and go ahead and share it out on your favorite social media platform. I'll be live for about another 20-30 minutes. All of my accounts is total maybe $2,000 for sure. So you would be starting to come into that inverted bell curve, but you're still, I would say, closer to that percentile. Maybe you're like at the 14 percentile. What's up, Mazox210? Good to see you, man. What up, Lydia? Welcome back to the stream. We just covered that like crazy. Only about 60%. What did I just say? There was a research done. Basically, they surveyed 5,000 people. GoBankingRates.com, and they found that basically 44% of people are not investing right now. Crazy stuff. Crazy stuff. So, it's interesting because a lot of people that aren't investing are like in that, like, there's people that have $50,000 accounts, and then there's people that have the $1,000 account or less. And so there's like an inverted bell curve of people that are not investing or investing. You know what I'm saying? I don't have in the bunch in the market, but greater than 1K. If we're in the bottom, hopefully we can make it to the other side. That's what I'm saying, man. It's all uphill from here. Like, I wish that they had the chart of what the actual bell curve looked like. 50, yeah, more shares. Yeah, and then when they figure out that they want to invest, then like, boom. I've already been in the market for the last 5 years. Like, hey, thanks. Like, thanks for boosting up my shares. You know what I mean? I'm just go ahead and take a little bit more. You know, I'll take a little bit more off the top. Eventually, eventually we're all gonna be playing with just house money. So. In here, you also, I guess they, like, just to continue on maybe a little bit of the conversation, I kind of missed it on the actual stream, but they said the main reason for investing is overwhelmingly retirement, with 57% people still wanting to say that. And then, which is good in the terms of responsibility, but it also could be, I guess, preventing more diversity in investments, absorbing everyone's extra money, especially a lower class audience. So, for instance, like, you don't got people that are maybe that are poor. They're only putting their money into the stock market, mutual funds, ETFs, and bonds, and they're not looking at buying real estate. They're not looking at buying gold and silver. They're not looking at other investments, maybe buying a franchise or whatever it may be. It's pretty much just straight like stocks and bonds, and that's pretty much taking all their extra cash that they have, and so it leaves them nothing to invest into other areas. And so diversity might not be something that abounds for them. Running back through the chat real quick. My night's good. If you do 40% of me, yeah, exactly. I'm in a defined better benefit retirement plan, so they don't put that into the market. I decided I need a backup. For sure. For how long? Buy high. I know, right? Well, I guess, like, when it comes down to it, I think, like, me specifically, like, dollar cost averaging is probably what I would utilize. Like, just because of the way that the market is right now. Like, maybe it's not the best time to buy because we are at, like, setting, like, all-time highs pretty much. But also, like, where is it going to be next week? We don't really know. But based upon historical data, like, it continues to grow. And so I think more importantly, like, I think it's Warren Buffett who said it, it's not about timing the market, it's time in the market. And I think that having like an additional $20 in today at an all-time high in 20 years from now will be way more worth it than trying to time it in 5 years, when if we and in the next maybe 2 years, if we had a steeper recession or a market downturn like we did in January. Like, I think that potentially putting that money in there, collecting on dividends, or maybe even getting a little bit of growth, be it 5%, is still better than not getting that and having that downturn in the market and then potentially having a wrong buy point. But that's just my idea on for how long and how to buy, all that kind of stuff. We're gonna I'll definitely touch on my buying strategy here in probably about the next 5 minutes. I got a season video that I'm going to record specifically talking about how I buy or when to buy on Stash. It was a video that I recorded actually last year where I talked about when do you buy and when do you sell, and so I wanted to retouch on that because it was one of my more popular videos, and so I wanted to go back and kind of like retouch on when do I buy and maybe some other strategies that I would consider using if I wasn't using my own strategy for buying and selling. I have almost a year in the market. It's been great. Did anyone invest in the IPO in Neo? I did not. I didn't even know about it, but I saw your video about it. But yeah, that was crazy. Like, what the heck happened there? Hello, Travis. The thing about the market is you don't know where high is. For a 30-year window, it is almost 100%. You are buying low right now. Yeah, exactly. That's, I guess, when you take it into the long-term approach, it's pretty much at an all-time low if you're looking in 30 years from now, potentially. By definition, the market will near all-time highs almost all the time. It should, as long as there's more people putting money in there and not as many people pulling money out. It's basic economics, supply and demand. As long as there's more supply going into the market and there's not a larger demand of people wanting to pull out money, then the market should continue to grow. That's it right there. And I mean, a lot of it is, that would be like at the basic level. Like, obviously, like there's a lot of people, like I would say, like investor. I think about Warren Buffett, who has like a crazy amount of Apple stock, and how he makes like almost like, I want to say like $1 billion in dividends basically every quarter, every year, or something like that. And that number could be completely wrong also. But like, you think that he's actually going to pull his money? He's going to pull his money from Apple? Probably not. Like, he's probably going to just leave it in there, because Apple, in and of itself, is generating money through sales and that kind of stuff. So they can afford to go ahead and pay him, a shareholder, some of what they earned. And so I think that at that point also, there's income stocks that great will pay you, and then there's also growth stocks. So looking at it from that perspective, like, you know, you might not get growth for the next maybe 1 or 2 years, but hey, you could still make some level of income that you could reinvest, making yourself a little bit more income also. I use AutoStash for sure, and I'm going to touch on that here in just a second. What do you think about Docu or DO? Let's go. Let me drop back here real quick, and then I'll go ahead and do a quick search. I don't know specifically what that is. DocuSign. I think I had that on my phone, and I hated the app. It wasn't very user friendly. If it's the one that I'm thinking of, it wasn't very user friendly for me. And let me go max on here. They just had their IPO in April. I can tell you, based upon their financials, I wouldn't touch them. They don't generate a positive operating income. That means they don't make money from being in business. So I just wouldn't touch them, to be honest. And that's like at the basic level, that's like my number one. Like, don't go there. Buffett said he hopes that Apple goes down so that he can buy back their own. So they can buy back their own shares for him, increasing his slice of the company. Yeah, exactly. That's what I would hope for too. I mean, when you hold that much, like, it works. I used to have it went it from IPO and sold, but I wish I kept it. Yeah, I don't really. It's a cloud-based electronic signature solutions. It's cloud-based electronic signature platform, helps companies and individuals to clear, collect information, automate data workflows, and sign anything. I mean, yeah. I when I was doing something with, I think it was for my insurance policy on my car or something like that, I had to sign something, and it just didn't work. Like, it just didn't work. And so I was like, look, here's an easier way to do this. Because what you want is an electronic signature, right? Or you want this paper signed or something like that. And so I was like, look, like, sign it and then take a picture of it and then email it to you, right? And I was like, that's exactly what this is going to do, correct? Like, besides the fact that it's verified, but you guys have already verified my email. You guys have already verified my phone number. Like, how much more verification do you need? I don't know. I guess at the upper levels for sure. Like, when it comes to signing, like, you know, contracts that are, I guess, more. I guess what would be the higher profile documents and that kind of stuff. Like, I could see verification being a much more important, especially e-signatures and that kind of thing. But at the low level, like, I don't think it's really solving a problem unless it was integrated into a online platform or integrated into a not specifically an app on your phone, but integrated into like the Apple iTunes app, that kind of thing. So they are cash flow positive on operating activity, but on operating activity they are cash flow positive, so that's a better sign. But as far as operating on their operating income or loss, they take a negative, what is that, 51, I want to say $51 million. And let's see how much money that I'll pull up the balance sheet right now. So this was reported 1/31/2018. We'll go look at their balance sheet. Actually, I want to go to their cash flow to see where their money's coming from. So they haven't been borrowing anything, and they see this is going to be a little bit skewed because, like, they're taking a negative. They're taking a negative in operating income, right? So that means that as far as like as far as a business owner, like, this company's not making you any money. Okay? So I mean, maybe in the next 5 years it'll make you money, but as of right now it's not making you any money. So that money's got to be supplemented from somewhere. That $51 million, right? It's got to be supplemented from somewhere. So where is it supplemented from? Right now, it comes from, it looks like, total cash flow from financing activities. It doesn't really, basically, so the way that I've seen it is when a company doesn't make any money, when a company's not making any money from operating, they're going to sell stock or they're going to borrow money. That's the two ways. They'll sell stock, they'll borrow money. Well, they had their IPO this year, so their next financial statement will have, right here, should have a whole bunch of money as far as purchase of stock. They sold probably tons of equity in their company, correct? So they probably didn't need to borrow any money. They probably haven't needed to borrow any money for the last 2 years because they've been anticipating selling stock. However, into the future, once you can't sell stock anymore, typically you go borrow money, or vice versa. That kind of works in tandem, correct? So that's all I'm saying is that, you know, when I look at a company like this, I think about it, like, here's what I think about. I think about if I owned a McDonald's, franchise, and every single year for the past 3 to 4 years, I looked at my balance sheet and said, it costs me money to keep these doors open. I haven't made a return on my investment. I don't know if I could. I don't know if I like that. So that's kind of my approach when I look at a company and see negative operating expense. That's what I see is like I'm going to, as a investor, as a owner of this company, I'm going to have to pay out money for them to open and close these doors, thus taking on more risk for myself. So there's a bigger upside for sure, but there's more risk of a downside also. I can tell you right now that if this company continues to stay the same way that they are and doesn't change a thing about them, they will go out of business. If all things are exactly the same, they will go out of business. Now I can judge based upon what their projections are into the future, what they say they're going to do into the future, but do I know if that's going to work out? Right now, I don't know if it's going to work out. All I can do is based upon what exactly it looks like as it sits right now. So, yeah. After, can you look at Oracle, Salesforce, Intuit? Yeah. Let's go ahead and take a look at Salesforce. I think that that was one of the analyst ratings that actually showed up on Robinhood. But let's go ahead and take a look at that one. So here's a company that does online stuff too. Let's go ahead and just get the Robinhood kind of briefing about them. Salesforce.com engages in the design and development of a cloud-based enterprise software for customer relationship management. By the way, it's very, very good. Salesforce, I've heard every single salesperson, like I remember going to school where marketing and that kind of stuff, and my guy that was teaching the class ran the Chamber of Commerce in El Cajon, which is the city that I live, well, one of the cities that is close to where I live. And he was like, by far, Salesforce is the best like platform that we use. And he's like, and we've been using it forever. He's like, he's like, this is just great. Its solutions include Salesforce automation, customer service and support, marketing automation, digital e-commerce, digital commerce, community management, collaboration, industry solutions, and Salesforce platform. There you go. Let's go ahead and take a look at their investing platform. So just based upon like their numbers on their cash flow statement, I'm sure that they have a positive operating income right there. Yeah, so they generated a positive operating income of basically $235 million last year, basically leaving you with a net income of about half of that, because they do have their other expenses and that kind of thing from continuing operations for sure. So leaving you with about $121 million. So I'd have to go look at their return on capital employed, but I bet you it's probably doing pretty well. Total assets, their total assets continue to grow. It didn't grow as much last year to this year, but that's still growth. That's something that I like to see. Their total liabilities, I would say, grew in almost tandem to what their assets did. So that means that the ratio between assets to liabilities did change a little bit. It's about a 2-to-1, which isn't all that bad. Anything over, I think, like a 2, I don't really care for. I can't specifically remember. I haven't really looked at a balance sheet in a minute. And then cash flow from operating activities, they're cash flow positive. That's a good sign that they're actually bringing in money that they can pay out money. They've been taking on a little bit more debt. And then, or actually, I think that they've started to pay off their debt, it looks like a little bit. Right now, they've got about $900 million on cash on hand. So effectively, they'll be in operation for quite a while. That's kind of the way that I'm looking at that last company. Like, they don't really have that much cash on hand. So, oof, it's rough. Yeah, I don't really, when I look at a stock, I don't really look at their chart, but that's pretty good growth, I would say, especially in the last I would say the last 2 years. That's crazy growth that we've had, almost 200%. That's definitely over 200% growth, or 100% growth, my bad. So that's pretty good as far as what it's done in the past, but it's the past, right? who knows if it's going to act like this in the future. I would just say that I think that more and more we need we look to have solutions solved by cloud computing, and it's easy. I mean, if you can communicate, if I have a sales team that's over in New York and I'm located in San Diego, we can communicate right through CRM, and that's very important. If I update some notes, like, then we don't have to create a platform in-house. We can just go use someone else's platform. And I think that that is a great thing for a business. Say we don't want to control the pipeline, because that doesn't make sense. We end up losing money that way. I just wouldn't have like a target of like where to buy at or anything like that. But interesting. I like the fact that they do generate quite a bit from operating. It's a good sign. Let's go ahead and we'll take a look at, we'll go ahead and jump into, let me go ahead and get off this. I'm going to go ahead and fire up these cameras, and we're going to go ahead and get into when do I buy, when do I sell on Stash, or when do I buy on Stash? And more specifically, like, how do I, they just became profitable in mid-2016. Exactly, and that's, I mean, if you think about it, if you're not having to take out loans, you're not having to sell off stock, like, and you could actually make money and then reinvest that back into your company, like, ooh, that's a good place to be in. Sorry for the yawn right there, guys. I'll be right back. I'm going to fire up these cameras real quick, and then I'll be back here. Yeah, they did just become profitable. Operating income to loss, they just, yeah, basically 2016. That's when they reported their first positive operating income. I wonder what their return on capital employed would be. Real quickly, let me look at that. Return on capital employed. I don't want to look at, let's go to, we'll just go here, and let me go ahead and copy this. And let me put this all back on the screen. Alright, I just duplicated it. So this isn't United Technologies. We're not going to look at that. We're going to look at, for just specifically 2018. So their total assets on the balance sheet here. Total assets is right here. Oops, got to get rid of these commas. And I got way too many spaces in there. 0, 0. And then their excess cash, which is right here. Get rid of, there was a 4 there. And then we'll go ahead and do non-interest bearing current liabilities. Total current liabilities right here. Boom. And there, that's their capital employed. And then we need to figure out their income on their income statement, operating income. Right here we go. We'll throw that number in there. You guys will be surprised. Their return on capital employed is 2.83% last year. That means if you basically gave them $1, they would give you back $1.03. On Simply Wall Street app, it shows 2.8. Yeah. And then their free cash flow return on capital employed. Basically, we'll go ahead and just calculate that too because it's really easy to. It's basically the same, just different numbers. These are basically how I go about like finding a company that I like to. Basically, what that tells me is that when I look at return on capital employed, basically I see that and go, okay, the S&P 500 did 15% last year. If I gave the S&P 500 all the basically VOO ETF, I gave it my $1, it would return me with 15 cents on top of that dollar. With this company, if I gave them $1, they would return me with $1.03. So they wouldn't really actually do anything. It would be better for me to give my money to the S&P 500 than it would be for me to give my money to solely this company. And that was CRM, right? Even though they've like been growing, it doesn't matter. Like that's basically based upon the books. That's what the books is saying. That's not what everybody else is saying. What everybody else is saying might be just speculation. Free cash flow return on capital employed. Capital expenditures minus cash flow from operations. And then we got to calculate cash flow expenditures right here. As far as free cash flow return on capital flow, they did. Ooh, that's not supposed to be up there. Yeah, free cash flow return on capital employed, and this one is. Do I got this one set up wrong? 13, and this one is 14. Yeah, so they did 26% free cash flow return on capital employed. So they do have quite a bit more, but like I would like to see this return on capital employed about like 10% at least, and it's not there. So yikes. Return on equity is 5.32. Return on assets is 3. For sure. See you later, Lydia. Thanks for stopping by. Anyways, enough of the boring aspects of investing. Anyways, I'm going to go ahead and fire up these cameras like I said I was just about to do. Alrighty. Let me just try to scoot this thing over a little bit. It's like amazing trying to scoot this chair over. It's like a brick, it doesn't want to move. Alright, come on guys, come on. Too much. The desk is getting full of stuff. I'm gonna just push that back right there. Okay, cool. Alright. That's pretty much what the camera looks like too, so a little bit different, but a little bit more wide angle right here. I'm going to move that over a little bit, and then the actual the record, and I think I'm going to just turn. I think that should be good right there. Someone said that we pretty much hear everything in the background, so I might put a noise gate on it or something eventually. But right now, whatever, it is what it is. Let's just go ahead and jump into it. Hey, what's up, everybody? Welcome to episode number 186 here on season number 2. And today we are getting in when should I buy on Stash in 2018. So these videos are meant for educational purposes only and not meant to be taken as financial advice. You are responsible for your assets and to properly protect them. So always, please do your own research. Yo, what up, DeAndres McLondon? How's it going? Oh yeah, turn down the music. You're right. There you go. So here's kind of like one thing about buying and then also selling is that a lot of people are like searching around, reading books, looking at different articles, looking around and trying to find the holy grail of investing, trying to find the holy grail of when to buy and when to sell. And obviously, I guess the best time to buy would be when the price of the stock is at its absolute low point, which would be maybe the last 10 years ago. Like, hey, we should have invested maybe into Apple in 2008 or even before that. So I guess that's the best time to buy was maybe when the stock is at its absolute lowest point. And then from there, you know, sell when it's at its absolute highest point. How do you go about figuring that out and predicting that into the future? Well, that's pretty much the impossibility of investing. It's all right now. Okay, good. Should I turn up the mic a little bit, or I think that's probably, I can turn up the mic just a tad. And I can cut the music down a little bit more. And its absolute low is not like its 52-week low. It's not its like 2-year low. It's not its 10-year low. It's when the price of that stock was at its lowest point that it's ever been at. And then also capturing the growth, the upside of it being at its absolute highest point would be the ideal perfect investment. So I guess there are like a ton of different ideas to, first of all, buying and then secondly, selling. Some of them, you know, get pretty cuckoo, I would say. And then others obviously make a lot more logical sense, for sure. Mike a tad, for sure. I can go ahead and take care of that. Yeah, let me go ahead and turn that up. I think that right now I'm in the red, but I can leave it right there. If that seems a little bit better, I can leave it right there. It's kind of hard to figure out because sometimes the mic picks up well. It's a condenser mic. That's why I'm trying to get a dynamic mic so that way it'll be right in front of my face, and then the volume level shouldn't be that bad. But for right now, I'm going to only focus on my buying strategy on Stash. So for me personally, what I do is I invest $20 bi-weekly into my Stash account. I have 4 ETFs and 1 single stock that I have target percents for. Well, right now on my Stash account, I actually only have 3 ETFs. I plan on adding one once the 3 ETFs have reached their target percents, and then obviously after that I'll add in 1 more single stock, and then from there I'll go ahead and purchase other stocks, but I'll get into that probably later on. But basically, if you're sitting there like, what the heck is a target percent? I'll kind of explain that real quickly. So for instance, I own Delicious Dividends. Delicious Dividends, I have a target of having that at 25% all the time on my account. And so when I make that, say I make that $20 bi-weekly deposit, well, Delicious Dividends happens to be at 24% when I make that bi-weekly deposit of $20. Well, then basically what I would do is buy Delicious Dividends with all that $20, bringing that up to like a 25% or maybe a 26% holding in Delicious Dividends. Well, if, say, Delicious Dividends was at 25%, then I would go ahead and look at Park My Cash being my second top holding. If that was at 24%, then I would put my $20 into Park My Cash, bringing that up to 25% or 26%. And then so on and so forth. If both of those were at 25%, then I would look into Real Estate Tycoon. If that one wasn't at 15%, then I would put that $20 into that one, bringing it up to that 15% or 16%. Or if it was, say, it was at 10%, it would bring it up to maybe like 12 or 13%. And so then maybe the next deposit that I made in 2 weeks from that day would be going into that Real Estate Tycoon as well. Let me just make sure I'm not getting ahead of myself. So the reason why I execute this strategy is because it's basically a dollar cost averaging strategy paired with buying stocks at the lowest price relative to your overall account. So with this buying strategy, this is pretty much what I use across the board on every single one of my accounts, except for when I take a swing trade out on Robinhood. So like dollar cost averaging, by the way, like there's probably a few videos that I've made, or you could just do a YouTube search on what is dollar cost averaging. Basically, it means making regular deposits or buying a stock. Basically, dollar cost averaging is buying a certain amount of stock at a... Oh, that's totally messed up. That's not the way that it is. Basically, dollar cost averaging is allotting a certain amount of money weekly, daily, monthly, at a regular period in time, making a regular investment of a regular amount of money into a stock. So for instance, that would be like putting $20 a week in Apple, regardless of price, on every Monday for the next 52 weeks or the next 5 years. That would be a dollar cost averaging strategy. So that's what I use on my account. And then I also pair it with buying the lowest producing or lowest performing ETF stock relative to my overall account. However, if I wasn't using this approach, then I would consider just doing a straight dollar cost average into the ETFs and stocks that I've deemed to be like worthy of my profile or portfolio. For instance, basically say I wanted a total of 8 holdings in my portfolio. Now this number is arbitrarily made up. It's not. I'm not saying that you should have only 8 holdings, or that you should not have more than 8 holdings, or that you should not have less than 8 holdings. I'm saying that this is just pretty arbitrary and easy for math, and you'll see here in just a second. And then from there, I would go ahead and turn on something called Auto Stash on basically each one of those. And so for me, I only have basically allotted to invest $20 bi-weekly or $40 altogether a month. And so what I would do from there is go ahead and auto stash $5 into each one of those ETFs or stocks once a month on a certain day, and I would just go ahead and let that continue to run basically for the lifetime, or until I felt it was unnecessary to let that go anymore. That would be pretty much a straight dollar cost average. And that's what Stash really pushes, is basically making a regular small deposit into stocks or ETFs that you either support, believe, or want to see grow more or less. And then my last kind of approach that I might consider using, if I wasn't using my dollar cost averaging plus that like percentage kind of buying the lowest performing relative to the overall account, I would go ahead and, do a straight dollar cost average, but go ahead and keep some of my cash liquid. And you're like, what's the purpose of that? I'll get into that here in just a second. This kind of approach would basically look like the straight dollar cost average, maybe picking 6 ETFs or equities or stocks, and then leaving $5 a month basically going into that stash cash. That would be for buying maybe on a big dip, or putting a lump sum of money into a specific investment into the future. For instance, maybe I read an article and I'm like, hey, you know what? This analyst is saying that Apple is looking really, really strong right now, and over the next 5 years, they've expected a whatever 25 to 30% return. And so I've got in my stash cash about $200 because I've been pretty much auto stashing that every single month for the last 2 years. And so you know what? I'm ready to throw that into Apple and let that kind of do its thing. So that would be like I guess the third strategy in using stash, specifically buying stock and equities, that would be, I guess, like if I didn't have my original setup, I would probably go with this strategy, because it does give you a little bit of freedom to maybe buy a stock that's underperforming, that you feel is undervalued or underpriced, and so you can go ahead and, you know, pick up AMD 6 months ago and go ahead and catch like 100% return or something like that. So there's that kind of added value that you can get just by, you know, going into like 7 ETFs and then adding that $5 into your stash cash. So I think that there is value in having some cash liquid. Me personally on stash, I don't keep any cash liquid because I like the investments that I have, and that's not the strategy that I have on stash. However, I do see value in having liquid cash. That's why on Robinhood, about 25% of my account is actually liquid. Also in this video, I was planning on talking about selling, but I think that I'm going to go ahead and save that for another video probably next week. And then I guess on the third week, I'll get into how I go about personally picking investments on stash, how I go about picking investments that I would like to buy on stash. But we will go ahead and leave it right there. Let's jump into the question of the day. I guess, well, real quickly, I guess another strategy would just be buying whenever you want, but I don't know if that's really a strategy. It is a strategy because, like, not having a strategy is a strategy in and of itself. If you want to get like really theological, or not, if you want to get really philosophical, then we could go ahead and talk about that. But pretty much no strategy is still a strategy. I think that these three strategies offer more added value than just buying whenever it looks good or whenever you feel like buying. Anyways, go ahead and leave right there. Let's jump to the question of the day, which is, who's the worst guest you've had in your house and what did they do? Well, I have to kind of go back into, like, I think like sophomore year of high school. I had a friend, and he invited a friend of a friend over. So I had a friend that came down to visit, and he spent the night at my house. And then he brought also a friend along that I have no clue who he was. And so, you know, we're like sleeping, getting ready to sleep, all that kind of stuff. It's like 11 o'clock. And this dude was like, hey, you know what? I got to go for a walk. And I'm like, okay, like, and he's like, do you got a spoon? And I'm like, I guess, like, if you, here's this, like, sure, I got a spoon. Like, I'm just trying to be the hostess of the mostest, right? And so it's like, here's a spoon, and next thing you know, he's off. And I'm like, and then my friend comes to me and he's like, hey, you know, where did he go? And I'm like, he went for a walk and he asked me for a spoon. He's like, no, he's like, I told him to not to do that while we were here. Like, he doesn't understand. Basically, he went to go cook, you know, some drugs. And I was like, wait, what? Like, what? Why do you need a spoon? He's like, he's a drug addict. And I was like, then why'd you invite him to the house? Like, why'd you tell him to not come? Like that? And he's like, cause like we made an agreement that he wouldn't do that when he got here. And I was like, oh, okay. I was like, well, that's understandable. And he's like, but then he just like jumped off and he's like, I have to go like yell at him now and that kind of thing. And I was like, okay, so I guess that would be the worst guess. It wasn't like he was dirty or anything like that, just because it was like, I guess, disrespectful in that sense, like that he would, first of all, take advantage of my hostess of the mostest and then go do that while sleeping over. Like, I was like, are you kidding me? Like, my mind still, to wrap it around there, it's just like, like, I'm like, what? Anyways, like I always say, if you got any questions regarding Stash, Acorns, Robinhood, M1 Finance, as well as general investing, business, Etsy, coaching, please post those questions down below. Don't forget to subscribe right up here. Check out these two videos right here in the link. And as always, thank you for watching. I really appreciate it. I mean, come on, I was like 16. Like, I mean, I could understand it maybe even more now, but back then I was 16. Like, what? Let me go ahead and stop this real quick. Yo, just running back over the stream. What up, the Investors Channel? Hey, boo, bro. What's up, bro? I think people use rebalancing on your birthday to provide that liquidity. That's also, yeah, another way to go about it too would be like there's that. That's why I kind of said like it could be cuckoo, it could be not cuckoo. Like it's kind of up in the air. Like, but it really comes down to like what what really works for your personality. Some people's personalities, they would rather have. Took me a few seconds to connect the spoon. Yeah, I was like, that's like I was like a spoon. Like what the heck? Yo, gestures. Thanks for the host. I appreciate that. Like me and my little 16-year-old mind, I'm like thinking like, sure, like here's a spoon. I don't know what you're gonna go do, like eat some cereal or something. Like sure, this is what we usually. Maybe you're trying to eat some food. I don't know. Like who knows what people bring down when they come to stay the night. And then it's like, no, man, he's gonna go cook up. So and I was like, what? Been lurking, boy. Yeah, so that was a little bit weird. That night, like I was like, what? And I was like, and then like I was like, bro, like you're not doing that with them, right? And he was like, oh, I have a few times. And I was like, what? Like what? Like it was like I was like, oh my gosh, like you guys are like I was like, well, I don't even know if we could be friends. I'm headed to bed though, so I won't be chatting any. Just gonna listen. Did something bad happen? Nah, we were the question of the day was like who was your worst house guest or something like that and why or something. And I was talking about how when I was 16, like one of my friends invited a friend also to come spend the night with him here at my and he was like, it was like 16. I was 16 at the time, or I think maybe even 15. And like he was like he like had asked at like 12 o'clock midnight. He was like, hey, yo, coach, or no, I wasn't coach at the time. He's like, hey, man, do you got like a spoon that I could use? And I was like, sure, like here you go, it's midnight, like whatever, like maybe you're hungry, I don't know what the heck, like what, maybe he brought some, like I don't know, like what were people drinking back there, like those pudding packs, I forget what those are actually called now. That'll bug me if I don't know what it is. A snack pack. I was like, maybe he brought some snack packs with him or something like that. And no, he didn't. Like he was like, he like was like, okay, thank you, and then like walked out the door and went on a walk. And I was like, okay. And so I went back upstairs, and like me and my friend were talking, and he was like, yo, do you know where he went? Like he's been gone for a while, huh? He's like, he's not, like, because he was a smoker. And I was like I was like, he asked for a spoon and then like went outside. I was like, I think he's just like smoking and maybe he got hungry too. And he's like, nah. He's like, he's a drug addict. He's actually like going to go cook some drugs. And I was like, are you kidding me? And he's like, no. And so yeah, that's what happened. That's yeah. So I was explaining that was probably the worst house guest experience that I had. Like I'm still kind of shocked and all, but whatever. Enough of that. I'm not looking forward to editing my video that I made last night. It was literally 17 or 18 minutes of recording. Digging into a Lunchable with a spoon. Yeah. Right? That's what I was thinking. Like, I was like, what? Like, for me, like, I'm thinking, like, take a spoon. Like, I'm just trying to be a good host. And he's like, yo, I need the spoon. I could just get me the spoon. Did you ever see him after that? No. Not after they didn't spend the night anymore. So, like, they spent the night, and then I never saw them anymore after that. Because like why? Well, I saw my friend that came down, but not his friend. Like no, I didn't. It was after that. Like it was like yeah, it kind of was like it's a no-go. Like no more. Like for you, no more bringing friends. No more bringing your friends over to my house. Because, like, we don't know what they'd be up to. You know what I'm saying? But, yeah. anyways, guys, I think that this is a good resting place to leave it off with. Tomorrow night we're gonna have. So tomorrow I'll probably be streaming in the morning. This morning I missed the gaming stream. Was so tired. Literally, I think I slept until like 9 o'clock. You think he would invest? Yeah, I mean, right? Like, I'm like, why didn't you just bring, like, you were gonna do that? Like, why? Like, I remember asking my friend, like, why didn't he just bring his own spoon? Like, was he not thinking? Like, he's like, I don't know, man. He's like, so yeah. I think my buddy actually caught him before he started to like use whatever he was using, and so I was like, okay, like cool, like whatever. But yeah, I'm still shaking my head. So yeah, like I was saying, this morning, I slept until about 9 o'clock until we missed the 4 a.m. stream. Partly because my phone was dead, so there was no alarm that actually went off at all, which does happen every now and again. And then tomorrow, I'm going to go ahead and pick up on some StarCraft, just because I feel like the last 2 weeks I've been kind of just missing it. So I think that we're going to go ahead and do that tomorrow. Throwback Thursday on Friday. And then tomorrow night will be, I think that what we're going to do is, because typically I go out early to start driving for Uber Eats. And so it's really hard for me to, write a script for investment related script for Friday night. And so what I think I might do is just go ahead and bring on Jacob, and we'll just do like food review Friday on Fantastic Friday or something like that. But yeah, I think that's what we'll do. Is so we'll still record a season video. It'll just not be an actual investing video. It'll be just Jacob and the food review, which is fun. Like, I love having it on, man. I can't wait. Like, we've been looking. You can accidentally sleep in. Yeah. Well, it bums me, like, literally. So it's like nice that I can accidentally sleep in, but also it like bums me out too, because like my planner's a little bit dusty because I also sand in here, but like, so I have my planner, right? Well, if I sleep until 9, there's about after the stream there's about an hour's worth of work that I usually do. And so that didn't actually, what I would say, about 2 hours worth of work today that I missed out on. So like that in and of itself is a bummer. And then also, like, I don't play video games, or I try not to play video games throughout the day except for on the stream. So that way I look forward to waking up early in the morning, and so it gets me out of bed. You know what I'm saying? So it's kind of like a double whammy. Like, it's kind of like a double bummer. It's like I didn't get to play video games in the morning, and then second of all, I missed out on about 2 hours worth of work. And so I'm going to have to make that up somewhere along the way, in which I planned on, like, my wife didn't have to work today, so I was like planning on going and driving Uber Eats earlier today. And like, I was like, I can't do it. So because I had to put an extra 2 hours worth of work in somewhere. And so yeah, that was kind of a bigger bummer. Like, that's what bugs me about sleeping in. Saturday and Sunday though, I don't really care. I'm like, sleep in, except for church on Sunday. And then I'm like, can't sleep in, but I try to. What was I saying there? Yes, sleeping in tomorrow night, Friday night, and then we'll be switching over to games. I've been having someone up in my Discord, like, really wanting to play Portal Knights with someone, and so maybe we'll play that tomorrow. Especially if I think she wants to play, then we'll go ahead and link up and make that happen. Because there's, I guess, like, there's cool things that you can get in the game that I didn't even know about. And my problem is that I made it a large map, or extra large map, instead of like a super small map. And so someone actually commented on one of my videos and was like, yo, like, your problem is that you're playing on an extra large map. You should have made it a super small map. And I was like, I thought the extra large map would make it better gameplay. And he was like, no. He's like, because then it's harder to find all the, like, NPCs, non-playable characters. And I was like, oh. Hashtag loser gamer. No, I'm just kidding. So anyways, that's up. In other news though, the PO box is not set up, but I'm going to once I get off stream in the morning, that's going to be the first thing that I look at, is getting that set up and making that happen. So hopefully tomorrow night I'll be able to let everybody know we have a PO box, and this is where you can send your new sunglasses or your old sunglasses or whatever sunglasses or glasses that you want to send. And then also we might start a like fund for getting a new microphone, because this one I think like retails maybe like I wouldn't say, oh, I bought it used for $50, but like the one that we want to get is about, I want to say like I could buy it used for like 200, but then also I got to get some other stuff, because this one is a USB, so it pretty much plugs straight USB to USB. But then like also like I got to get one for Jacob, so it's kind of going to be expensive. So I don't know, we might do startup by like that's what the donations will go to. I don't know, we'll see. I've been kind of browsing around for cheaper alternatives that still produce some level of the same quality. So for those of you guys that don't know anything about mics, this right here is called a condenser mic, right? So what it does is it picks up sound from everywhere. So if I stand right here, like it sounds good, I could go stand back on the back of the room and it would still pick up sound. I could turn it to a setting to where if I was standing behind it, it would also pick up sound. It picks up sound everywhere around it. So typically with the condenser mic, usually you get like a shield or something like that that shields basically no sound coming in from the back or the sides, and then it just picks up what you specifically speaking to it. So it makes it kind of full. But this one kind of does that. But then like also like you can hear keys and that kind of stuff when I type, when I game, all that kind of stuff. So yeah, what will happen with like the dynamic mic, which is pretty much like, you know, the mics that like singers sing into, all that kind of stuff, that's a dynamic mic. Basically it's a different way of how they pick up audio, and it's like straightforward, so I'll be speaking straight into it. That should pick up better audio quality, podcast level quality audio or something like that. So that's what we're looking at getting, but obviously that's going to be more money that we're going to have to shell out. And yeah, so I'm excited. I think that it will enhance the first of all the stream experience, and also enhance the videos that I do come out with as well. But it will be interesting having Jacob like have his own mic and just sitting there like talking into the mic. I think that would probably be the funniest part of the actual entire experience. What are the costs? So there's two different mics that we're looking at. There's like it's called a Shure, I want to say 7B or something like that. Those ones retail for about $400, which then also I got to get like a mixer box, which I think those ones that runs like $150. So like out the door, I'm probably expecting to pay just for one mic, probably like $600-700. Where if I could find one used, which I'm not against like using a used microphone, like that is the way that I plan on going about it. I hope that I could find it for like half price. There is a few other ones that are, there's another mic that's almost comparable to the Shure mic that I'm talking about, and right they're up in, I've seen one for like $200, and so if I could get that, then I'm looking around like $400 or so. So that's kind of the like price point that I'm trying to find. There is a mic that's a dynamic mic that's a USB mic that I could get that retails for about $50 brand new, and I might just go with that for now. That way I can still get, it's still pretty good quality, like it's still really good quality. It's just not like the greatest quality that you can get, you know. So that's where I'm looking at, which $50 is a lot more reasonable than going out and spending $200 to $400 on a new microphone, and then to go overhaul the entire setup and get a mixer and all that kind of stuff is just something that I want to do in the future, but for right now it just doesn't seem like the most feasible thing. So yeah, SM7B, yeah, that would be it. Yeah, that's the one. Yeah, the Shure. There's also, I think it's, I don't know, there's another one that I was looking at. It's called the I want to say the R20. RE20 by Electro Voice. And those are about pretty comparable. Yeah, exactly. That's pretty much the, as far as like podcasting goes, that's pretty much the standard podcasting mic, like that people use. So I've been looking for cheaper ones, cheaper options, and that kind of thing. And I think that we might just go with a cheaper option, and while we save up for, we start putting money away basically for those better sounding mics. And then we also kind of want to overhaul a little bit of the live stream, because my wife is planning on coming out with a channel. I don't know if you guys know this, where she's going to cover more political stuff, just like candidates that are running, like background on candidates that are running, that kind of stuff, like very, very, I guess, more informative, and trying to come at it from a non-biased perspective, which out of all of the people, she's probably the most non-biased person that I know as far as like politics comes. So I think she's perfect for the job. But coming from it from that perspective, like, and talking about people that are running for public office, laws that are on the ballot, all that kind of stuff, she really wants to talk about that stuff, and she plans to come out with a video like once a week. So I told her the best option for that would basically be to get a better webcam, and so that way, because like personally, like I don't want to have to do all the behind the scenes stuff of setting up the recording, all that kind of stuff. Like I want her to be able to come out and just record out here, and we plan on getting a drop down on the back. What about a lapel mic? Yeah, that would also be another option. I think just bigger mics look so much cooler than wearing lapel mics. I don't know what it is. I could get 2 of those, and those usually are a little bit cheaper for sure. I guess the sky's kind of the limit. So what we'll probably end up doing, especially if I can find 2 of those like $50 mics for cheaper, then we'll probably just ended up going that route. So that way I don't got to go get a direct mixer box or anything like that to amplify. I can just still go USB to US to mini USB or whatever, and then maybe what we'll start doing is like saving like 20% of what we make on YouTube, and eventually start buying better microphones and that kind of stuff, getting a better setup. I don't know. We shall see though. That's I think the plan, but we'll see what gets approved by the wife. So, because first and foremost, I think it's webcam. Just keep your big mic there and use a little bell. People will be like, "Yo, that thing's." I don't know. I might look at getting a lapel mic, just a cheaper one, and see what kind of audio quality I can get. I think that this mic does do very good quality audio. I just wish that I could, like, eventually I'll have to get a stand and all that kind of stuff anyway, so it might be worth it, like, just to go ahead and try to do what I can with this mic. But I think that, like, going dynamic is probably the way to go about, like, getting the highest quality audio. Lapel mics do work well, and I've used them before in some of my videos. Not my recent season videos or anything like that, but like my videos from like 4 years ago. It's just I think the thing about using a lapel mic versus using one of these or even a dynamic mic is that there's not that you got to tweak. You're gonna have to tweak the lapel mic basically every single time that you use it. The distance, same, yeah, it will. But like also you got to think about it, like whether I have it, if I have it, oh, you guys can't even see that. This mic is so big. If I have it, like if I hook it right here and if I hook it right here and I start using it, and then say the next stream I'm wearing a actual t-shirt, not a V-neck, and I have it right here, I'm going to have to go down and turn down the audio on that. And so every single stream could potentially be different where I place the mic or get a headphone. Yeah, man, I'll use a headset mic. Yeah, we'll figure it out though. I think once I have a better idea on what I want to do, like first, like right now, it's just I'm in just research mode, and I'm not an audio guy, so there might be a way just to make this Yeti sound a lot better than it actually does, which is something that I'm going to look into also. We're like limiting how much it picks up, how much decibels it picks up, all that kind of stuff. Putting like a noise gate on it and stuff like that. Deep V-necks could be a yes, exactly. But I'll even go ahead and leave it there right there, guys. Like I said, I'm going to take care of that P.O. box first thing in the morning and see if we can get that set up and keep on moving on from there. But yeah, so let's just kind of keep you guys updated with what might be moving forward on the stream. We'll see. Everything's always up in the air until it's finalized. That's the way that I look at it. But anyways, much love. Thanks for everybody for being here. Thanks for hanging out. Thanks for, joining. I hope that this stream did bring you some level of value. I'll be on tomorrow morning for sure, playing some games, and then tomorrow night doing our thing. Anyways, thank you for watching. I really appreciate it, and I'll see you when I see you, which will be later. Anyways, bye, guys.